All right, we're live. Hey, thanks so much for joining me today. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's about taking control of your money, about making your money work hard for you because you work hard for your money. The title today, the market's three hottest large cap stocks send ominous warning, exclamation mark. Who are the stocks? NVDA, Meta, Eli Lilly. I'll explain exactly what I mean right after we roll the intro, and we'll go through a quick update. And let me just get to the intro, which I normally have already preloaded, and then we're going to talk about that, and we're going to explain to you why I say what I say, and maybe there is an opportunity now for you to do something that we talk about often: rebalance or making sure your risk level of your portfolio hasn't gotten a little out of hand. Here we go. All right. Thank you so much for joining me. I'm Mitch. You're watching Be the Boss of Your Money. Let's just take a quick look at the markets first. Dow recovered most of its drop from yesterday, which yesterday was not it wasn't a particularly severely down day, not that big of a deal. Nasdaq up a little bit fractionally. It was up earlier. I mean, I'm sorry, excuse me, it was down earlier today. S&P 500 not far from its record high. A little ways to go for another record, but we've been having record after record, and it's almost 5,000. It's 49.54. We're a good day or two away from hitting 5,000. I hope we get there soon. It'll be a nice milestone to talk about in the market. Gold has been trading, between 2,000 and 2,100 for a long time now. Hasn't gone either way. Oil, impressively low, $73.45 per barrel. That is, in my opinion, it's been pretty low with everything going on. That's because we're pumping oil like mad here, and the world is well supplied. I mean, China and India are getting their oil from the Middle East, a little bit from Russia. The West is getting their oil from North America and South America and parts of Africa. It's not that there's less oil going around. It's just that it's really more a matter of the trading of oil has changed. The buyers and sellers, the match of the buyers and sellers has changed, but the amount of oil sloshing around in the world, even with OPEC cuts, is still the same and going up a little bit. Now, I did read something that oil demand or oil supply will change and we could see oil go higher, but we always hear about things like that. And by now, if they're Ukraine and Israel, tough. I mean, people make all kinds of predictions. I remember holding up a street cardboard sign 2 years ago saying that it's not something about how dumb it is to predict the price of oil based on Russia invading Ukraine, and the predictions were outrageous that how high oil would go, and none of them came true. And in fact, quite the opposite. The 10-year yield is a little over 4%, just about high enough for me to consider for the right clients, 10-year zero coupon bonds. Let's look at the VIX. The VIX is 13. The VIX continues to be very low, indicating either not a lot of worry about the market or maybe the market's stuck. Now, by the way, while you're watching this, if you have any questions about what we're talking about, our personal finance, what have you, please ask in the comments. I love hearing from you. It's the best part about what I do here. And it's great that you watch this in the live stream. You know that once I finish, you can watch the replay. These shows stay on YouTube. They stay on my timeline. I stream to my Facebook business page, Client First Strategy, where you may be watching me, LinkedIn, and YouTube. And I post snippets on all those platforms, plus on Instagram. So you can follow me on social media, and I'd always appreciate that as well. And while you're watching this, if you like it, give it a thumbs up. It helps more people see it, helps your contacts see this, and it just, it all helps the cause, right? It's a good cause, money control. Because, if you don't take control of your money takes control of you, right? And then we ask ourselves, how did we get here? That's because you're not watching, Be the Boss of Your Money, right? Yeah, that's a good plug right there, right? Shameless plug. So let's talk about this ominous warning, and you could take this for what you want. I know it sounds a little ominous, but I do see a problem. And it's a little bit early to make a big call on this, but I've been saying, for about a week now, that if you have giant gains in some of these massive giant companies and you're older, time has gone by, you're closer to needing your money from your investments to pay for your income, now could be the time to start taking something off the table and rebalance. It's great that you see a stock go up a lot, and it's great when you're in it. But if you have a few of these mega cap tech stocks and they've gone up a lot, you're doing pretty well. But generally speaking, if one or two go down, they're all going down. We saw Tesla break down. It went from 300 to the 180s. It's almost down by half in a very short amount of time. So we've seen this movie before. And I think once one goes down, it often can spread to the others because this cohort of large cap stocks trades together. And it's not just the big cap tech stocks that are making new highs. A lot of this is, financials like JP Morgan, retail lines, Walmart, Costco, drug stocks, Lilly. But let's start with Lilly while we're at it. Eli Lilly. Okay, the symbol is LLY. I'm punching up a quote. I'm going to share my screen and pop myself up here in the corner. Okay. Lilly, you see this? Earnings today, they blew past earnings. Their weight loss drugs are just selling incredibly well. They truly made hotcakes. They truly made a miracle drug that you take it, you lose weight without any effort. It's really remarkable. But now it could be good for sleep apnea, fatty liver disease, all kinds of things that are fixed or cured or better maintained, all kinds of health elements that are improved with losing weight. So maybe one day the insurance companies will start covering this en masse. But here's the warning. It said right here, 52-week high. And this morning, Lilly was up like over $30 a share. Today, the high on it says 742. You see that, okay? 742. The daily high today was 742. That was today. It hit a 52-week high, popped up, and was up all day until the end of the day. It actually gave it all back and went down. A reversal of sorts, if you will. And I think it's a little ominous that there's a blow off top. I don't know if this is a severe blow off or one day wonder. We have to see. But as an experienced investor, 30 plus years, and as a financial advisor, 30 plus years, it does make me want to think about maybe for the right client saying these stocks are up an awful lot. Maybe I can't rely on these stocks going up every day, every week, or every month to help me manage my money. And this is just to me as a trader saying, from 742 so high today and finishing at 705 down on the day, that, a lot of profit taking came in today. Maybe the stock just hit maybe it just established a new ceiling of resistance. That's, I guess, a better way to put it. So while we're on that one, let's check on Meta. Meta, if you don't know, is Facebook. Facebook changed their name to Meta to say that they're focusing on the metaverse, and Facebook is now merely a division, albeit a large division, the biggest division of Meta. Now that Meta is focusing more on Facebook and less the metaverse, the stock has risen tremendously. 167 is the low. It went to 45 2 days ago. It was up over $80 a share. Now, I'm not saying it was up over 20%. 20% is huge for a company this big. The market cap on this company is over $1 trillion. So when it goes up 20%, you're talking a $200 billion increase in valuation virtually in the snap of an announcement. And they announced a dividend, okay, 50 cents a quarter, $2 annual dividend. So now they're paying a dividend. It's already up 28% this year. You see that? It's up 28%. But here's the thing. The stock was as high as 467, as low as 453. That, even for a high price stock, that is a pretty big gap in the day-to-day between the day high and the day low. But the stock was just 485, and now it's 450 and change. So that high is not being maintained. In fact, it's being met with a lot of selling. Let me get rid of that. So to me, another possible ceiling has been put in place on another large cap tech stock. And then let's look at the hottest of the hot big cap stocks, NVIDIA. NVIDIA's been on quite a tear, and that hit a 52-week high today. And oh no, it was down $11 in the regular trading session. You see that? Down $11 and down another 4.5 after market trading. Didn't you just say 52-week high? Yeah, it hit a 52-week high today at $697 today, and yet it went down on the day. It looks like another toppy situation. The trader in me tells me that maybe they just hit a ceiling of resistance. That's sending a signal, and you add Tesla, the Magnificent Seven, these mega cap stocks, they're coming in a little. So if you're one of these people where you're sitting on a big fat profit in a very large account, this is not a sell recommendation. I know my lovely, wonderful compliance people are saying, Mitch, be careful. We don't want you making buy and sell recommendations to the public without knowing the specific person you're talking to and about them and what their needs are. And of course, without sending the Reg BI email that I'm supposed to send to prospects. So it's not a buy or sell recommendation. This is simply that a lot of people have as prospects and clients and just friends out there who talk to me about their accounts. They tell me how great they're doing, and they are all doing it in the same stocks. Now, some of these people are of a certain age where they're not too far from having to start converting their passive income into income. And I'm concerned that a lot of people are taking a lot more risk than they planned because they're so concentrated now in a couple of stocks. Even the S&P 500, okay, is 34% technology. And the top 10 biggest stocks, 8 of them are technology in the S&P 500. Of the top 10, 8 number 9 is Berkshire Hathaway, number 10 is United Health. So, and by the way, I'm not saying that automatically technology is too big a part of the S&P 500. I'm not. I'm the first one to say, and I say this like every day for the last week, as technology becomes a bigger part of our economy, a bigger part of our society, that will, I expect, will continue to be reflected in our stock market. It makes sense. We're not going back to the 60s or the 70s where it was utilities and communication stocks. But sectors do have a way of going up together and down together. And valuation is not necessarily an indicator of direction, of price direction. But to me, based on my experience, valuation is an indication of how severe a move up or down could be. Thank you so much for watching. I'll be back tomorrow. You are lovely. And if you have any questions for me, you want to speak with me directly, you can always reach out to me, and you know where to reach me. Have a great day.